Well, I thought I would talk a little bit about the role of accounting in general, and then more specifically about the role of accounting in the current economic crisis. The role of accounting in general is to support our markets, so to support efficient markets. And that's because for our markets to be efficient, they need capital to function. And to get capital, you need to be able to attract investors or creditors. The way investors and creditors make decisions is based on the information that's available about companies, and a big piece of that information is accounting information. So the role of accounting is really to provide financial information to the markets. That's not to say that the financial information is the only thing that's important. We can think of a lot of examples of information that's not financial, but that would be very important in valuing a company. For example, if a pharmaceutical company was to come up with a cure for AIDS in some new drug that they were developing, obviously that would be of great interest to people who wanted to invest in that company. Nevertheless, we can say that it is a standard practice for people who are looking to invest in a company or extend credit to a company to look at the company's financial position and their financial performance. And those things are provided by accountants who prepare the financial statements of a company. The financial position of the company, in simple terms, is an explanation of what the company owns and what they owe. So in that respect, the financial position gives an investor or creditor a sense of where the company stands at a given point in time. The performance of a company, on the other hand, deals more with what the company does with their resources. Is the company profitable? What kinds of revenues and expenses do they generate? And what are their cash flows? That information is also very important to someone who's thinking about investing in a company, because if they're going to invest in a company, what they're looking for in the long run, of course, is to either receive dividends or see the stock price increase because the company is doing well. So what do accountants do? The accountants, in terms of providing information to the capital markets, have two very broad roles. One is that they prepare these financial statements and issue the financial statements, and those would be prepared by people who work at these companies who want to raise capital, who are participants in the markets. There's a whole other group of accountants who we call public accountants who audit the financial statements. And their role is also very important because while they don't initially prepare the financials, they are the ones who review the financials, make sure that they are prepared in accordance with generally accepted accounting principles. And those are the principles that are used in the United States to try to ensure that the financial statements reflect economic reality, that the financial statements really do give a good picture of a company's financial health and of the company's performance. So in terms of the role of the accounting profession, then, it's kind of twofold. They prepare those financial statements, and then another branch of the profession is independent of those preparers, and they review the financial statements, and that provides the market with some assurance that they can rely upon those financial statements when they make decisions. So that's very briefly the role of the accountants in terms of providing information. I wanted to take just a moment then to talk a little bit about the role of the accounting profession in the current economic crisis. There is a topic that's generated a lot of controversy today, and that is mark-to-market accounting. Kind of an unusual phrase, but what it refers to is the way that a company values the things that they own. So when we look at the financial statements of a company, many of the things that they own are going to be valued based on what they paid for it, on what it cost. But there are also a number of items that the company owns that are going to be valued based on current market value. The things that the company owns and that provide a benefit to the company are called assets, the accounting terms. And if you read the financial news today, you hear a lot about toxic assets. Well, these toxic assets essentially represent investments that the company has made that have tanked given the current market conditions. And there is an accounting rule that has generated a lot of controversy, and it's a relatively new accounting rule that essentially required companies to value financial assets, things like investments and mortgages, at their market value. Well, when the economic crisis started to unfold, the market value of many financial assets dropped precipitously. And as a result, banks, insurance companies, and other financial institutions that held some of these investments found that they had to record very significant losses and started to blame the accounting rule for the problems that they were encountering. I'm going to finish by trying to address two questions. The first is, did the accounting rule cause the crisis? And my answer to that would be absolutely not. Toxic assets exist regardless of the accounting rules. So the problem was not that these accounting rules required companies to recognize losses on financial assets that had declined in value. The problem was that many banks and financial institutions had invested in these very risky assets. There's an old saying that you manage what you measure. And to a large extent, I would argue that the accounting rule is actually helpful to us because it is requiring companies now to measure changes in the value of their assets, and that is forcing them to manage their portfolios more responsibly. And so, arguably, in the long run, I think that using these fair market value measures is going to be a good thing for the companies and for the economy because it's going to force managers to be more attentive to their core business. A second question we might ask is, what is the role of the accounting profession now? How can they help now that we're in the middle of this crisis? And I would suggest with respect to this that the role of the accounting profession is unchanged from what I talked about initially. It is to provide information that's useful for making decisions. And that means providing clear, helpful information in the financial statements. In addition to having a responsibility to communicate things fairly and to communicate things clearly, I think the accounting profession can also have a role in educating the public and making sure that people who use financial statements understand what information is available there and how they can use it to make better decisions. So while it might appear that this economic crisis occurred overnight, in reality it developed over a period of time, and really a period of years. A number of different factors led to this, and I think as a result the recovery is also going to be something that will take time. Nevertheless, I think that the accounting profession will play an important role in returning the markets to where they once were, returning them to normal, whatever that might be. And I'm proud to be a part of that accounting profession.